Good morning, and welcome to yet another edition of Macro Now, said to be released every Monday morning. Today is Monday, November 2nd, 2020. My name is Alexander Turro, Senior Market Strategist here at RJO Futures. We're going to be contextualizing the rates of change of growth and inflation, not only here domestically, but globally as well. So with that said, we'll start with the global currency market. You had the US dollar index up a big 1.4% last week, moving back to bullish on a 15-day basis, but remaining bearish on a 90-day trending basis. You had the euro versus the US dollar down minus 1.8% last week, moving back to bearish on a 15-day basis, remaining bullish on a 90-day trending basis. You had the Japanese yen up another 0.1% versus the US dollar, remains bullish on both a 15-day as well as on a 90-day trend duration. And you had the British pound versus the US dollar correcting minus 0.7% last week and remains bullish on both a 15-day as well as on a 90-day trend duration. Well, it's interesting to note here on this dollar up week was that commodity deflation wasn't as broad-based as you may would have thought. The CRB index deflated minus 4.0% last week, with oil being the biggest reason as to why that was. Oil deflated minus 10.2% last week after failing to hold the bullish trade 15-day trade support line. And with oil now running up to over 70 this morning, it deflated another 2.4%, but has largely come back off those lows and is trading positive right now on the day. Taking a look at something like copper, that corrected minus 2.6% last week, remains bullish on both a 15-day as well as on a 90-day trend duration, and is up 0.5% in the last week. And if you take a look at something like nat gas, that inflated another 5.0% last week to plus 7.6% in the last month, and remains bullish on both a 15-day as well as on a 90-day trend duration. And taking a look at gold here, which operates more like a currency as opposed to a commodity, was down minus 1.2% last week and was on sale, with GVZ, the volatility component of gold, continuing to remain subdued. Moving along to the volatility index, the VIX, the front month went out to 38 to end of the week. With that kind of volatility, having U.S. equity futures rising and falling nearly 30-60 handles at a clip, because the volatility is trending in the wrong bucket for stock pickers, which is exactly what you're seeing here this morning. Taking a look at the Vixen, the volatility component of the NASDAQ, that went out at 41 on Friday, which could easily go back to the mid-40s, with tech stocks, SLK down minus 6.4 last week. And breaking that down a little bit further, you had Facebook and Tesla both down minus 8% on the week. And just touching up on global equities, you had Chinese stocks correcting minus 1.6% last week, and are actually up 0.2% in the last month, versus something like German stocks, which got utterly crushed, minus 8.6% last week, now down minus 9.4% in the last month. So continue to keep an eye on volatility, which is utterly paramount to performance, as we're not looking to be investing on a thematic basis with a political catalyst. So with that said, if you have any further questions or would like to divulge further, please feel free to reach out to me directly. Otherwise, thank you for listening, and keep your head about there.